You know, in the biotech world, there are deals, and then there are, well, signal deals. Those really rare transactions, they don't just move one stock, they actually anchor a whole investment rotation, sometimes define a whole technological era.
Exactly. And for those of you watching the RNA interference space, the RNAi sector, we're diving into a pretty big strategic hypothetical today.
Okay.
It's speculative, definitely, but it says a lot about where the sector is heading. We're talking about Alnylam Pharmaceuticals, that's A-L-N-Y, maybe acquiring a big minority stake, say 30 to 40%, in Arrowhead Pharmaceuticals, ARWR.
Wow, okay, 30–40% stake. That's
That's
significant.
nice.
So let's unpack this. We're talking, what, multi-billion dollars potentially? Something that would really reshape the whole competitive field.
Absolutely.
So our mission today is to dig into the sources, look at the strategic sense of it, the financial side, is it even possible? And maybe most importantly, what is the fact that we can even talk about this plausibly? What does that tell us about RNAi now?
Yeah, it's a sign of maturity, right? Moving from just surviving to being, well, consolidation worthy.
This kind of scenario, this specific idea, it wouldn't have even been on the table a few years back, I imagine.
No way.
Yeah.
But it fits a pattern, you know? There's a history here of market-defining moves in biotech.
Right. And these signal deals really matter because they shift where the money flows. I mean, think back. Gilead buying Pharmasset in 2011. $11 billion.
Huge at the time.
Yeah. And it wasn't just about one drug. It was about consolidating that platform. And it really anchored that whole hepatitis C boom we saw. Or more recently, BMS buying Celgene, 2019. $74 billion. That basically stamped immuno-oncology as this massive wave, right?
It really did. And the RNAi journey, it kind of follows that arc. I mean, it went through a really rough patch, technical problems, financial collapses back in the early 2010s.
Painful.
Oh, I remember. The RNAi winter. Exactly. But then, starting around 2018, we started seeing approvals, consistent wins. And now we're heading into what people expect to be the big expansion phase, let's say 2025 out to 2030.
And that expansion is focused where?
Two main things, really. Big markets.
Yeah.
Cardiometabolic diseases, think heart disease, diabetes, lipids. And second, moving beyond the liver. Getting these drugs into other tissues. Extra-hepatic delivery.
Okay, so that's the backdrop. This is the moment, maybe, where you'd expect some kind of big consolidation move to define this new phase.
Precisely. It feels like the right time strategically.
So if this is that expansion phase, let's compare the two key players here, Alnylam and Arrowhead. How do they stack up right now, technologically, financially?
Okay, so Alnylam, they are definitely the incumbent, the titan right now. They absolutely dominate delivery to hepatocytes liver cells.
That's the GalNAc technology, right?
That's the one. Think of GalNAc like this super efficient postal code system just for the liver. Highly targeted. They've got 4 drugs approved already, plus the huge phase 3 program, zilebesiran for hypertension. That could be massive.
And financially.
They're strong, sitting on a war chest, maybe $2.8 billion in cash. You saw their Q2 numbers for 2025, revenue up, 64% year over year, significant growth.
Okay, so established leader, strong finances, liver focus. What about Arrowhead? They're the disruptor in this story.
You could say that. Arrowhead is the one really pushing the boundaries on delivery outside the liver. Their TRiM platform, that's their proprietary tech, is aimed at getting into those critical areas Alnylam will eventually need. Muscle tissue, adipose or fat tissue, even the central nervous system, the CNS.
So expanding the reach of RNAi.
Exactly. And pipeline-wise, they've got plazosir. That's a big one. Potential game changer for lipids. Its PDUFA date, the FDA decision date, is coming up Q4 2025.
That's soon.
Very soon. And they also have zodasiran in phase 2B, another lipid target, ANGPTL3. Financially, they're smaller, around $500 million in cash, plus potential milestone payments from partners.
Okay, so what really jumps out here is, well, the timing. It feels critical.
It really does.
No.
You've got Arrowhead right on the edge of becoming a commercial company, assuming plazosir gets approved. Big transition.
Yeah.
And meanwhile, Alnylam has all this cash, this capital, and you have to think they need a clear path beyond just liver targets for long-term growth.
So it makes this moment, like you said, strategically ripe. A real high-level chess move might be possible. But here's the thing that trips me up a bit. $2 billion maybe for a non-controlling stake. 40%. That sounds counterintuitive. Why wouldn't Alnylam just buy a smaller company outright? Or just pour that cash into their own R&D?
Yeah, no, that's a totally fair question. And that skepticism is probably the first reaction many investors would have.
Right. Giving up control seems like a huge compromise.
It is. But the strategic thinking here, if this were to happen, is less about maximizing near-term return on investment and much more about hedging against some pretty big existential risks and
Sure.
securing future growth options.
Okay.
We can break it down into maybe 4 key drivers. You could almost call them, I don't know, the necessary moves of a dominant player trying to stay dominant.
All right, laid them out for us. Driver number 1.
First, the immediate battleground.
Yeah.
The cardiometabolic turf war. This is happening right now. Alnylam's got zilebesiran for hypertension. They have inclisiran through their Novartis partnership for cholesterol.
Big markets.
Huge. But Arrowhead is coming right at key lipid targets too, like EPO-C3 with plozasiran and AGPTL3 with zodasiran. Taking a big stake in Arrowhead, it immediately shifts that dynamic. There's head-to-head competition into more of a, well, shared interest. It neutralizes a direct threat to Alnylam's future in cardiology.
Okay, so that's like a competitive buffer. Makes sense. What
Right.
about the technology angle?
That's driver number 2. And this one feels more fundamental, more existential for Alnylam. It's the delivery hedge.
Hedging against what?
Against relying only on liver delivery. Alnylam's current leadership. It's almost entirely built on GalNAc getting drugs to the liver so effectively. But like we said, the future growth for the whole RNAi sector depends on getting outside the liver.
And Arrowhead has the tech for that with TRiM.
Exactly. Arrowhead's TRiM platform is that potential multi-tissue platform. So for Alnylam, owning a big piece of Arrowhead is like buying a crucial insurance policy. It hedges against 2 potential problems. 1, their own GalNAc tech eventually becoming outdated or less dominant. And 2, maybe future challenges to their intellectual property around liver delivery.
Ah, okay. So it secures access to the next wave of RNAi delivery without having to build it all from scratch or risk missing out.
Precisely. It's a strategic foothold in extra-hepatic delivery.
That makes a lot of sense. So you mentioned blocking rivals. That sounds, well, defensive.
That's driver number 3, the defensive block. And yes, it's absolutely defensive. Think about it. A 30 or 40% stake owned by Alnylam makes it much harder for anyone else to buy Arrowhead outright.
Who would be the potential buyers they'd worry about?
Well, you'd have to think about major players who want a bigger piece of RNAi or need that extra-hepatic delivery, maybe Amgen, Novartis, even though they partner with Alnylam, Sarepta, who's deep in muscle diseases.
Right. Companies with big ambitions and deep pockets.
Exactly. If one of those competitors grabbed Arrowhead, got control of the TRiM platform and that pipeline, that would be a massive immediate threat to Alnylam's leadership position globally. It's possibly Alnylam's nightmare scenario.
So the stake acts like a poison pill almost, deterring a takeover by a rival.
A very expensive, very strategic poison pill, yeah. It protects their flank.
Okay, that's the protective layer. What's the 4th driver? You said it brings us back to the market.
Yes. Driver 4 is the investor signal. This kind of move, Alnylam taking a huge stake in a key competitor. It wouldn't just be a financial transaction. It would act as the defining RNAi consolidation move for this era.
Like the Gilead Pharmacet deal did for HCV.
Exactly like that. It sends this incredibly powerful, visible signal to the entire investment community. It says, RNAi is here. It's mature. It's stable. It's ready for serious long-term capital.
And that signal could draw more money into the space overall.
Absolutely. That signaling effect alone could accelerate investor rotation into RNAi, benefiting both companies and validating the whole approach for big, long-term funds.
Okay, the strategy hangs together. Turf war, delivery hedge, defensive block, market signal. But let's talk brass tacks, the money. Does the math actually work? Is this financially realistic, or is it just, a nice idea on paper?
Financially, yeah, it looks feasible. Let's run some quick numbers. Arrowhead, say it's trading around $35 a share right now.
Okay.
That gives it a market cap of roughly $3.9 billion.
And for Alnylam to get that 40% stake.
You'd expect them to pay a premium, right, for a strategic stake like this. Maybe 20%.
Seems reasonable.
So a 40% stake at a 20% premium, you're looking at a price tag of around $1.9 billion, give or take.
Almost $2 billion. And Alnylam has.
They've got that $2.8 billion in cash we mentioned, plus they have access to capital markets through convertible notes if needed. So that $1.9 billion, they can cover it from their current cash reserves. The capacity is definitely there. They wouldn't necessarily need to go out and raise new debt for it.
Okay. And how would they actually structure it? Just buy shares on the open market?
Probably not for something this size. More likely, it'd be structured as maybe a private placement directly with Arrowhead. Alnylam gives Arrowhead the cash. Arrowhead issues new shares to Alnylam.
Which would also give Arrowhead a nice cash infusion.
Exactly. And crucially, a deal like that would almost certainly come with strings attached, specifically board rights for Alnylam. seats on Arrowhead's board.
So even without full control, they get influence and visibility.
Significant influence, yes.
Okay, so the money's there, the mechanism works on paper. Now, the reality check. This sounds good, strategically, financially possible, but what are the big roadblocks, the practical hurdles that make a deal like this actually quite difficult?
Right, and this is where, elegant strategy often bumps up against messy reality. There are some major obstacles.
Like what? First
off, capital allocation optics. How would Alnylam's own investors react?
to spending nearly $2 billion on a minority stake.
Exactly. Some investors might see it purely as a defensive tax, like you said earlier, a cost to protect their dominance, rather than something that drives immediate growth. They might argue that money would be better spent acquiring a smaller company outright, getting 100% ownership, or just plowing it back into Alnylam's internal R&D pipeline.
Yeah, I can see that argument. Why pay a premium for influence when we could buy control of something else or build it ourselves?
That's the debate you'd see. Optics matter.
Okay, what else? Arrowhead doesn't operate in a vacuum, right? They have partners.
That's hurdle number 2, and this one could be really tricky, potentially even a deal breaker. Partner dynamics and conflicts. Arrowhead has important, valuable partnerships already in place. Think Amgen, Novartis again, Takeda.
Big pharma players who have deals with Arrowhead for specific programs or technologies.
Right. Now imagine Alnylam, a major competitor, suddenly owns 40% of Arrowhead and has board seats. How do those existing partners feel?
Probably. Not great. Potential conflicts of interest everywhere.
You got it. It could create immediate perceived conflicts.
Mm-hmm.
Would Alnylam get insight into programs partnered with Amgen? Would board decisions favor Alnylam's interests over, say, Novartis's partnered program? It could seriously complicate, maybe even jeopardize, those existing valuable deals for Arrowhead. That's a huge risk.
Okay, that's a complex web to navigate. What about regulators?
Can't forget them. Hurdle number 3, regulatory scrutiny. You have 2 dominant players in a hot therapeutic area like RNAi potentially combining forces even through a minority stake. The Federal Trade Commission, the FTC, would absolutely take a close look.
For anti-competitive concerns.
Yes. They'd want to understand if this stake would lessen competition in the RNAi market, especially around liver diseases where both are strong, or in future areas of cardiometabolics. It might not block the deal, but it would definitely add time, complexity, and uncertainty.
Okay. Optics, partners, regulators. Is there a fourth one?
I think perhaps the biggest hurdle, maybe the most fundamental, is simply Arrowhead independence.
Meaning their leadership, their culture?
Exactly. Arrowhead's management team, particularly its CEO, Chris Anzalone, has historically been fiercely protective of the company's independence. They see themselves as a lighting platform company in their own right, not just, a technology provider or a future acquisition target.
They want to build their own powerhouse, not just be absorbed or heavily influenced by another.
That seems to be the ethos. So getting Arrowhead's leadership and board to agree to sell a 40% stake, effectively giving Alnylam significant influence and board control, that's a major cultural and strategic barrier to overcome. It might just be a non-starter for them.
Okay. So, strong logic, financially doable, but tricky politics, partner issues, and maybe a fundamental clash of wills.
That sums it up pretty well. The practical hurdles are significant.
All right, let's play pretend for a minute. Let's say somehow, magically, all these hurdles disappear, the deal gets announced tomorrow morning. What happens in the market? What's the immediate reaction?
Okay, hypothetical scenario. For Arrowhead, boom, instant validation, massive re-rating of the stock.
How big a jump are we talking?
You'd likely see, I think, a 20 to 40% pop, maybe more, almost immediately, pushing the stock well into the, say, $42 to $50 range, maybe higher, based on that $35 starting point. It signals the strategic value is recognized.
Okay, clear win for Arrowhead shareholders in the short term. What about Alnylam, the buyer?
For Alnylam, probably the opposite reaction, at least initially.
A dip.
A near-term dip seems likely, yeah. Exactly, because of those capital allocation questions we discussed. The market might see it as that defensive tax, money spent not directly on near-term growth.
But long-term.
Long-term, the narrative could shift. If the market buys into the strategic rationale, the delivery hedge, the defensive block, securing future growth, then it ultimately reinforces Alnylam's position as the undisputed leader in RNAi. It gives them that clearer path to extra-hepatic targets, locks down a key part of the future landscape, and it could accelerate that broader investor rotation into RNAi, which ultimately benefits the leader most.
So short-term pain for potential long-term strategic gain.
That's the likely trade-off investors would weigh.
All right, let's pull it all together then. Stress test this whole hypothetical one last time based on everything we've discussed.
Okay. The logical drivers. Why Alnylam might want to do this. They seem strong. Cardiometabolic positioning, delivery hedging, blocking rivals, signaling maturity. Makes sense strategically.
Financial feasibility, can they afford it?
Yes. The numbers work. They have the cash. It's within their capacity.
But the practical likelihood, will it actually happen?
That's where it falters. Practical likelihood seems, well, weak. Low probability.
Why? Which factors weigh most heavily against it?
I think it's primarily the combination of that cultural resistance, that desire for independence from Arrowhead's leadership, coupled with the really complex, potentially deal-killing partner conflicts it would create. Those seem like the highest barriers.
So the analysis suggests, what's the more probable future?
The more likely path forward probably remains what we see now. Intense competition between Alnylam and Arrowhead, but also continued selective partnerships, maybe more licensing deals on specific programs rather than a big equity stake or outright acquisition, collaboration where it makes sense, competition everywhere else.
Okay, so the big stake is probably not in the cards.
Probably not this specific scenario, but, and this is really the critical synthesis for you, the investor listening, while this specific 30–40% stake deal is unlikely, the fact that we could even construct a plausible argument for it, that's the real takeaway.
What is that plausibility signal?
It powerfully underscores that RNAi as a sector has fundamentally shifted. It's moved past just being a cool science project or a story about survival against the odds. It's now viewed as a credible, strategically important, consolidation-worthy therapeutic modality. It has entered its maturation phase. That's the big picture change.
That is the ultimate signal, isn't it? The game has changed. So even if this particular Alnylam Arrowhead deal never happens, just thinking through it reveals the pressure points, the strategic needs, the growth pathways for the entire sector.
Exactly.
So maybe the final thought for you, the listener, is this. Okay, maybe this specific deal is off the table. But given everything we've discussed, the need for extra-hepatic delivery, the cardiometabolic race, the potential for consolidation, what other defining moves or alternative signal deals should you be watching for? Maybe smaller M&A, platform licensing, spin-outs? What happens next as this RNAi expansion phase really kicks into high gear over the coming years? Which platform, which capability gets secured next? That's the space to watch.